Hey everybody, Boris. Welcome to the weekly technicals for commodity dollars for Aussie dollar, dollar CAD, Kiwi dollar, November 28th through December 2nd, 2016. And I think the story in the COM dollars this week is actually been a mild story of a comeback, especially as the end of the week happened, with the exception of dollar CAD, which has got its own story which we'll address. Now, as far as Aussie goes, I think Aussie is actually, let me sort of start with, I guess, the strongest to the weakest. To me, the strongest right now is the Kiwi. Even though week ahead, we do have a lot of mild event risk. We have of course, the RBNZ Financial Stability Review, and we have Governor Wheeler speaking. But given the fact that the Kiwi now is considerably lower than it was, it's 70 instead of 74 when he spoke just even a couple of months ago. Whatever job wanting they do at this point is unlikely to, I think, move the currency much lower, because the underlying strength of the New Zealand economy actually suggests that there should be no further rate cuts for the time being. And that still preserves the Kiwi yield in the advanced industrialized world much better than just about everybody else on the COM dollar spectrum. And of course, the dairy prices have been relatively good. I mean, just generally sort of all of the potential growth aspects of New Zealand have not been destabilized over the last several weeks. And that suggests that the RBNZ, despite its dovish stance, is unlikely to do any further damage on the monetary policy to the downside. So I think Kiwi has probably the strongest chance of a rebound this week. It doesn't have, we don't have any economic data on the set, but just the review and the commentary from Wheeler probably aren't going to be able to trip it up much. On the other hand, Aussie does have some economic data. We have the private capital expenditure. That could be significantly worse than the market thought. We already had a very large destruction in construction spending last week, which everybody is now anticipating going to cut at least 3 to 4, 30, 40 basis points off of the GDP growth. And we also have retail sales. We have to see how well those go. But there is potential here for Aussie to underperform, I think, for those reasons. And then last but not least, CAD has got its own story. Of course, as I record this on Friday afternoon when the OPEC agreement seems to be unwinding, oil prices were down 4.5% into the New York close. And we'll have to see just how much more of a bounce it has. But I think there's a sort of a secondary issue here with oil, which is that even if OPEC agrees to some sort of a production cut, remember that the Trump election is extraordinarily positive for the fossil fuel industry. There's going to be no limits on fracking whatsoever. That means whatever supply we have in the U.S. is going to just swamp whatever reduction in supply the rest of the OPEC tries to contain in the market. And greater efficiency, greater productivity in the fracking sector will allow a lot of these producers to be able to pump it out at around $40 to $45 a barrel, which means I think oil remains capped. Add to that the fact that we have a Canadian GDP, which could be a little bit lower, and Canadian employment data, which has been very good for the last couple of months, but now is very likely to do a little bit of a pullback or payback. And I think the pressure on the dollar CAD here really accelerates, with dollar CAD looking to be the strongest of the trades that we have this week. So let's take a look at the support resistance. Aussie found its support at 73, and I think that's, for the time being, that's a relatively safe area of support, although resistance at 75 is very, very strong, I think, this week. Unless we have a massive, massive dollar correction, I don't see the 75 getting busted with any degree of confidence. On the other hand, dollar CAD, any further weakness in oil could certainly test the 36s. 36 was a poke that we had a couple of weeks ago, but this time, if it takes out the 36s and then compounds itself with weaker Canadian data, we really could have a move all the way out to 36.50, maybe 37 before the week ends, and that puts it into a relative weakness trade against all its other commodity dollar partners. On the other hand, Kiwi certainly found very decent support at the 69s, and unless we have extraordinarily strong language from the RBNZ that jawbones it further, it's unlikely, I think, that it's going to, I think it's very likely going to test, hold support in this 69, 50, 70 level with a push back up now towards the 71. This especially will be true if U.S. yields start to come back. If the 30-year in the U.S. starts to come down below the 3, if the 10-year starts to move towards it below to 220, all of those things very favorable for a Kiwi rebound. And that could be the interesting trade of the week. Let's just take a look at the charts here and we'll see. So here's the Aussie. We can see that the Aussie, no surprise here, found this support really at the 73, 73.50, 73, found this double bottom, triple bottom support, bouncing back up. And now the 75, 75.50, very, very likely to be the cap on any kind of a move to the upside in the Aussie. As far as Kiwi goes, again, the support at 70 has been relatively strong here, and it has a chance to extend. 71, certainly the key resist here, and the bigger resist is going to be the 72. But I think 71, 71.50 again in a Kiwi potentially could be a move as the week progresses. The more interesting trade here, if you buy the oil is done CAD weakness story, is this whole trade over here. Now the high over here was what, 35.87, right? Just in front of the 36 figure. So the 36 figure I think is going to loom very, very large for anybody who wants to squeeze dollar CAD higher. Certainly, you know, dollar CAD has been nothing but an uptrend trade here. Nice higher lows. The key thing is if it takes out the 36s, it's very, very quickly can run towards the 36.50s. So to me, the relative weakness of CAD is going to be one of the bigger things to watch out for. Conversely, a break below the 34s really would completely change the story. That means oil goes back up to 50, OPEC comes to some kind of a deal, and maybe Canadian data is not as bad as everybody thinks, and we find a relative strength in Canada. In that case, and it's not impossible to entertain that scenario, but in that case, the key level to hold is the 34s. If 34 breaks, a lot of the bullish thesis in Canadian dollar kind of goes away. So for now, I think the bullish thesis stays. I like any kind of a buy to dip trade here as long as 34 can hold, and the move ultimately towards the 36 very much in the cards. This is the one trade that I think has more dollar strength in it than the rest of the market. Wish you guys the best of luck, the best trading. Boris, over and out.